Hey, what is going on, guys? My name is Nick, and in today's video, we need to talk about Meta's earnings that just got released for Q1 2022. So far, the stock is reacting insanely after hours, which is not out of the ordinary for Meta stock. And before we get into the video, all I ask is that you destroy the like button and please consider subscribing if you have not already. And I also wanted to thank today's video sponsor, Inverse, which is a free financial research platform, but more on that later. All right, guys, as we can see here, Meta Platforms is up over 16% after hours. That's about a $30 per share move, making this stock worth over $204 per share after hours. And keep in mind, at this point, we still haven't had the conference call, so if there is any other good news on the conference call, then this stock could be even higher tomorrow. But anyways, let's get straight into the numbers. So here we can see Meta said, "We made progress this quarter across a number of key company priorities, and we remain confident in the long-term opportunities and growth that our platform will unlock." So in Q1 2022, total revenue grew 7% year over year to $27.9 billion, which is awesome to see. This is right in the middle of their range that they had predicted. However, we can see that their total costs and expenses grew 31% year over year to $19.38 billion, so their profitability did drop year over year. As we can see, their net income is $7.47 billion versus $9.5 billion in the previous year quarter. So diluted EPS came in at $2.72 versus $3.30 last year. As we can see here, analysts were expecting $2.51 of EPS, and then Meta reported $2.72, so that is a pretty healthy beat. And although they did miss slightly on revenue, expected to be $28.2 billion, they actually reported $27.9 billion, but the market really didn't care about that. And although Meta did miss on revenue by reporting $27.9 billion when analysts were expecting $28.2 billion, the market doesn't seem to care about that, with the stock being up 18% now after hours. That is crazy. Now, getting into some of the other financial highlights, here we can see that their family of daily active people, or DAP, was 2.87 billion, an increase of 6% year over year, which is solid. Their family of monthly active people saw 3.64 billion, and this was again an increase of 6% year over year. Facebook's daily active users came in at 1.96 billion on average, an increase of 4% year over year, and then monthly active users on the Facebook platform were 2.94 billion, an increase of 3% year over year. Now, in terms of the ad impressions and price per ad, in the first quarter of 2022, ad impressions delivered across our family of apps increased by 15% year over year, which means that there were more people on the platform and more advertisers on the platform. However, the average price per ad decreased by 8% year over year, which is why their revenue only increased 7% year over year. Now, in terms of share repurchases, they say they repurchased $9.39 billion worth of common stock in the first quarter of 2022, and then they have $29 billion available and authorized for repurchases for the rest of the year. Finally, cash and cash equivalents are still at about $44 billion as of March 31st, 2022, which is really solid to see. All right, now let's get into their earnings presentation, where we'll be able to see a lot of the different charts that Meta likes to show. So here we can see for Q1, their advertising revenue came in at about $27 billion, and the highest increase per region in the world was actually in the Asia Pacific region, where they saw $5.7 billion versus $4.7 in the previous year quarter. Then in terms of the US and Canada and Europe, it was basically flat year over year, but they did see more of an increase in the US and Canada versus Europe. By the way, guys, if you are looking for a really great and free stock research platform to use, I would highly recommend using Inverse, the sponsor of today's video. As we can see, this business has been growing revenue each and every year over the past 5 years without a break. Yet here we can see the stock price is only trading a few dollars above where it was trading 5 years ago, despite the business growing that much. Inverse also shows the analyst ratings on the stock, and here for Meta, they have 18 strong buy ratings with 3 moderate buy and then 8 holds without any sell ratings, so that is really solid. Anyways, if you're interested in signing up for Inverse completely for free to analyze any stock of your liking, definitely click the link in the description below or the pinned comment. And with that said, let's get back to the earnings analysis. In terms of their segment results, we can see they produced an operating margin of 31%, which is the lowest out of their past 6 quarters. In terms of their segment results, we can see that their operating margin was 31%. However, this is the lowest out of their past 6 quarters because they are investing very heavily into that Reality Labs segment of their business. And we can see that clearly here with their total income from operations down significantly from 1 year ago, from $11.4 billion to $8.5 billion. In the next slide, we can see expenses as a percentage of revenue. So we can see this has steadily been climbing ever since Q4 of 2020, but really if we compare it to 2 years ago, it's not that much higher. Now, taking a look at net income here, we can see that it has been steadily declining since Q4 of 2020, and it is down down from Q1 of 2021, as I showed you earlier, but it is still a lot higher than the Q1 and Q2 of 2020 numbers. Diluted EPS has also been seeing a bit of a decline since Q4 of 2020, but not as much since the company has been repurchasing a lot of shares, and we will get into that in a minute here. Here we can see in the first quarter, CapEx increased from 4.4 billion to 5.5 billion in Q1 2022, and that ends up being about a 25.5% increase year over year for the quarter. And keep in mind, their revenue only grew 7% year over year, so their CapEx is growing quite a lot faster than their revenue. In terms of the family of daily active people, this is across all of the different Meta platforms, so Facebook, Instagram, WhatsApp, and Messenger. Now, in terms of the family of daily active people across all of the different Meta platforms, so Facebook, Instagram, WhatsApp, and Messenger, this came in at 2.87 billion in Q1, and this was up from 2.72 billion in the prior year quarter. And we can also see this did increase quarter over quarter too, which is great to see. Then the family of monthly active people also saw an increase year over year, as well as quarter over quarter, to 3.64 billion people. And as we can see here, planet Earth has 7.75 billion people as of 2020. And if we divide Meta's monthly active people across all of the different platforms, this gives us a ratio of 0.47. So 47% of the world uses at least one of Meta's platforms. All right, now here we can see the family average revenue per person. So the average revenue generated by each user across all of the different apps that Meta owns. In Q1 of 2022, that came in at $7.72, but this was about flat year over year, slightly down from Q1 of 2021, where it was $7.75. All right, now the most controversial slide here is the Facebook daily active users. So last quarter, we actually saw a huge drop in Facebook stock price because they did drop by about 1 million users quarter over quarter. But then as we can see, going from Q4 to Q1 of 2022, we actually increased by 31 million users across the entire world on the Facebook platform. So that is really good to see that it's still growing. And that's why you can't really look at things on a quarterly basis. You have to look at the bigger picture. And if we smooth this out year over year, this would end up being a net increase. The same thing goes for the Facebook monthly active users. So this actually increased from 2.912 billion to 2.936 billion. All right, now probably one of the most important slides here is the Facebook average revenue per user, or ARPU. Typically what we've seen over history is the ARPU will increase with the amount of users on the platform and the increasing amount of ads on the platform. Therefore, the price per ad increases over time. And that got all the way up to $60.57 in Q4, but this has dropped down to $48.29 in Q1, which is only slightly up from Q1 of 2021. But this is only for the US and Canada. So if we look at worldwide, this actually did increase a little bit more. So $9.54 versus $9.27. And I could see this increasing much more over the years to come. Since many companies are still advertising on the radio, on television, where they really don't get that high of conversion, so there will be a huge transition over to online, and tons of advertisers will still be going onto the Facebook platform, therefore driving up the price of each ad. This was especially apparent in the Asia Pacific region, where we saw $4.47 versus $3.94, and then the rest of the world, which grew to $3.14 versus $2.64. All right, guys, now the last slide I want to show you here is the free cash flow over time. So over the past 4 quarters, Facebook has generated quite a lot of free cash flow, and this was up from 7.8 billion in Q1 2021 to 8.5 billion in Q1 2022. And despite EPS and net income being down year over year, their free cash flow was actually up year over year by about 9%, which is solid to see. All right, now what I want to do is show you all what's going on in their cash flow statement, because it does paint a bit of a different picture than what you see from net income. So as we can see, this past quarter, they had $7.5 billion of net income versus $9.5 billion in 2021. So it was down by about $2 billion year over year. However, after we account for a lot of the non-cash expenses like depreciation, share-based compensation, deferred income taxes, things like that, we actually come to net cash provided by operating activities of $14.1 billion, which is up from $12.2 billion in the prior year quarter. And guys, as we can see here, that's a 15% increase year over year in their net cash provided by operating activities, which means this business is still roaring and doing very well. And that is also the reason why their free cash flow increased year over year despite their net income being down. And the last thing I wanted to show you on this statement is their repurchases of Class A common stock. So we can see in this past quarter, they repurchased $9.5 billion worth of stock versus the last year's quarter of $3.9 billion. So this is an insane increase year over year, about 250% increase year over year in repurchases. So obviously management is trying to get their EPS up, and they do realize that the stock is at a very good value right now. So that's why they're repurchasing so much, and I love to see this. All right, now in the last part of this video, I do want to go over Facebook's current valuation after this earnings report and after hours where the stock is trading. So the first thing we need to understand is the amount of shares outstanding that they have right now. So in 2022 Q1, they have 2.742 billion versus the same quarter last year of 2.88 billion. So we can see that that is a 4.9% reduction in their share count year over year, which is solid to see, and therefore that will affect their price to free cash flow. So if we assume that the stock price is about $200 per share after hours, and then we multiply that by 2.742 billion shares outstanding, divide that by the free cash flow throughout the trailing 12 months, that gives them a price to free cash flow of 14 right now. And we can do the same thing for the trailing PE ratio. So we divide $200 per share, which is the stock price after hours, and divide that by the earnings per share over the trailing 12 months, and that gives them a trailing PE of 15. So in my opinion, for a company that's still growing revenue at 7% year over year, and then they just grew their net cash provided by operating activities by 15% year over year, and then free cash flow by, I believe, 9% year over year, this is still a very solid valuation in my opinion, and much cheaper than a lot of consumer staple stocks like Coca-Cola, PepsiCo, Procter & Gamble, etc. And I believe that there was so much negativity priced into this stock going into earnings that even though Facebook did miss on their revenue estimates, the fact that they did beat on EPS and they are showing strength in their business model from the cash provided by operating activities, this was a very good sign for the stock and why it's up so much after hours. So yes, I am still a happy shareholder in Meta stock, and I do not plan on selling anytime soon. If anything, I will be continuing to accumulate shares because this is at a crazy cheap valuation, priced free cash flow of 14, and a trailing PE ratio of 15. I mean, come on guys. Anyways guys, I really hope you enjoyed this video. I just wanted to get this quick update out to you after Meta's earnings report for Q1 2022. And it seems like the underlying business is still doing very well, as we saw from their cash from operations and their free cash flow growing quite a lot year over year. And the business is still trading at an incredibly cheap valuation compared to a lot of other stocks. So I'm 100% going to be holding my Meta shares and buying the dip as I see fit. So yeah, I'll have to keep you guys up to date. But anyways, if you did enjoy this video, don't forget to drop a like. I really do appreciate that. And please consider subscribing if you have not already. And with that said, I will see you guys in the next one.